every deal we look at, we first look at it through an investor's eyes. So it's literally, what is this going to mean to the end user, to the person who's actually putting money into the deal? And that's actually how we evaluate everything from the start.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back with the Fully Funded Show, this time with Sam Morris of Sunset Capital. Really excited to talk to Sam. Definitely a different take in terms of raising capital for some folks we've had on here, and also really unique background in terms of both being an operator and a capital allocator as well. So I'll turn it over to Sam to allow himself to give a more formal intro.
Yeah. Hey guys, thanks Sam. Thanks for having me, man. Awesome background that you got going on right there. Obviously back in New York City. My name's Sam Morris. I'm the CEO of Sunset Capital. So we're obviously owners and asset managers in the multifamily and storage space located here in Houston, Texas. Our company has about a little over 1,100 apartment units, a little over 2,000 storage units right now. We've been growing fairly rapidly in the last 2 years or so. But this is kind of an old hat for me. I've been raising money and doing deals since back in 2007. I'm a corporate banker by training, and so have a little bit of a lender skew vision when I'm looking at deals and things of that nature, which helps us obviously underwrite deals a little bit differently and a little bit better, and obviously see the world more so probably through that lens. So we know how to get deals done. But excited to be here today and get to talk with you, Sam. I mean, obviously we share our namesakes together, so we're obviously right.
There you go. But so on your end, so how did you kind of make it into the space, into the owner operator, capital allocator type space from the lending banking world?
Yeah, so in 2018, we sold my last bank, and it was at that time that I'd already been investing heavily in real estate and been doing asset management on the side, and I decided, this is something I'm going to do full time, and jumped into the space full time. I had a partner at that time. We did a couple thousand units, mainly here in Houston. And then about 2.5 years ago, branched off and we started Sunset Capital. And so been doing that kind of independently ever since. And so it's been great. Having done a lot of these deals, having lent, well over $1 billion plus on, all kinds of commercial real estate, and been exposed to all different types of businesses and models, and having been raising money, since long before, go back to 05, 04, been raising money, mainly in the banking and business side of things, and then with real estate. But obviously long before the Jobs Act was created in 2012, when crowdfunding came in and really blew the space up.
Sure. And so help us understand kind of what Sunset Capital does, because we've had conversations offline where you do some operating yourself in terms of kind of being the owner operator of those projects, and also kind of partnering up and raising capital for others on their type of deals for diversity too. So can you help us understand the layout and structure of that, and kind of why you do both things?
Yeah, so we will absolutely own and operate some of our own deals, and then we'll co. So a lot of times we get asked to co. I would say, this year alone, which we're towards the end of May of 24, I bet we've been asked to co-partner, and if it's less than 30 or 40 deals, I'd be surprised. And so a lot of people like to co-partner with us, not just from an equity standpoint, but from an expertise standpoint, and particularly if the deal's in the state of Texas, because the way our structure is situated is we have teams of people that work with us, and so we have analysts, we have CPAs, and legal, and we have brokerage side. So we have a lot that's built in to help get us vertical that way, to help us find the deals. But a lot of it still has to do with size. So when the deal size starts to get over a certain limit, call it $50 million or higher, we're normally going to be a co or into that deal. And when it's below that, we'll normally attempt to try to lead. We think we have the resources to be able to lead a deal that size. And so we haven't quite made the jump to one way full or the other. We actually like being able to play in both spaces because we think we add value in both of those spaces. And it really is more about adding opportunities to the investor base that we have. So,
sure, it makes a lot of sense too. You can go get better access and help save some legwork up front at times as well to get better access to deals to give investors a level of diversity.
Sure.
So on on your end, I know we were actually talking offline before this as well, and you mentioned a good mutual friend of ours going through one of their deals and kind of finding something in the underwriting that and being really positive. Like, what are things that you look for and your team looks for when evaluating a deal, whether it be a deal you're the lead sponsor on or a co-sponsor on, that really gets you excited right now?
Yeah. So one of the greatest things about the way we look at things too, and I think it's part of the reason for our success, is every deal we look at, we first look at it through an investor's eyes. So it's literally, what is this going to mean to the end user, to the person who's actually putting money into the deal? And that's actually how we evaluate everything from the start. Most of our KPI metrics and things like that, it is geared towards that, to how does this provide that kind of return associated with the investment that's going to be made. And so we actually look at it that way first, which is a little unique. Even what we found in the business is that, a lot of people are seeing what they can get out of it, right? Why this is profitable for them. And then secondary, it's going to be, all right, now what is it going to mean to the investors that I would bring to the deal? Ours is a little reverse of that. Is, what is this going to bring to the investors, the deal? And if we're able to do well for them, we're normally going to do well for ourselves. And so when we're evaluating deals, you have to understand too, being an ex-banker, the amount of thousands, if not tens of thousands of financials that I've looked at over my career, a lot of things stick out for us too on the asset management side. And we tell people, we read numbers the way you would read words. So, financials tell a story to us. Pro formas tell a story to us. We can figure out a lot of things about what the plan is for that property by reading the numbers associated with it. And more importantly, what is that going to look like for the end user? What is that going to look like for the actual investor? And in doing that, when we can evaluate these things, if something comes off, it normally sticks out pretty easily to us, right? So we can see, all right, hey, you've been a little aggressive here, or hey, you haven't been conservative enough here, whatever it may be. Or hey, a formula's off over here. It's not tracking the number the way it should track. And those kinds of things stick out to us pretty easily. So if we're digging into a deal, we're going to first look at numbers and things associated with that. Is it a market we want to be in? We have a lot of metrics of where we go down the list. And if it's something like that that we want to proceed with, right, it would be something that we would present. But the first and foremost would be, would I put my own money into it? So I invest in every deal we do. Every deal we've done, I'll always put my own money into it. So if it is good enough for me, it'll be good enough for other investors. And if it's not good enough for me, it's not going to be good enough for the other investors we're going to have. And so, but looking at what specifics of the things that we're looking in for deals, it really depends on the investor base what we have. So we'll have some people that are, let's just say, they're IRA investors, they're older, and they're looking just straight up for cash flow. They're going to want to use that money to live off of. We have some people that are more speculative in nature, and they'll take a gamble on a development deal or something of that nature. And so you kind of run the gambit with that, and knowing who you're going to cater that to, and then being specific with the messaging of, hey, look, this is a deal that's going to produce cash flow, right? It's going to have this type of return, or this is a deal where the cash flow is going to be thin based upon all the projections that we're seeing, but the end game may turn out really well for you. So total return may be solid, right? And so it really just depends on where we are in the cycle for that deal and what the end investor is looking for.
So with that in mind, you mentioned we're roughly 5 months into the year. You've been approached 40-ish times, right, to go co-sponsor a project. How many have you done so far?
So we've completed 2. That tells you that. We're contemplating a third. And I would tell you that the underwriting associated with all of those really comes into play that life cycle where we are with another deal, because we're closing another lead deal that we're doing. And so we've turned away some because we don't like to dilute the messaging. So we'll do one deal at a time right now. We won't typically push out more than one deal at a time, just so that we can keep everybody focused with what we're doing and how we're doing it. So,
sure. So those 2, maybe 3 deals, versus the 36, 37 that you passed on, understanding some you may have passed on from a capacity and focus perspective, but the ones that you chose to go do versus the ones you didn't choose to do, help us understand a few key differentiators as to why those stuck out that made a lot of sense for investors, or why ones that you may have passed on, right? What are things in those deals that may have caused you to, not move forward there?
Sure. Absolutely. Yeah. A lot of it has to do with, some of it could be with the philosophy of the lead group, right? We've had some that we've looked at where, their objective was to raise a whole lot of money associated with the deal. And they were effectively, when they were going to sell, they were going to reset the market. Now, they were going to put a lot of money into the property right now, but the risk associated with having to reset the market into a deal is pretty substantial. And so if we're looking at a deal where, we can come up and we can sit there and go, hey, it's reasonable to sit there and think that if the highest sale in the market was this, and you think that you're going to exit somewhere around there in the next 5 years because you're buying it at this basis, well, that makes a lot of sense to us. But if you're buying it, say, at 80% of where the highest one is, and you're going to reset the market by 30 or 40% higher than where the highest sale was, man, that's a little tougher to do right now. And from a risk reward perspective, there may be other opportunities that are out there. There are also some that we would see, where they're buying it, let's say buying an exceptional cap rate on the deal, right? So they're spending a lot of money to buy down their cap rate associated with the loan that they're getting that enables them to cash flow really well. Well, all you're really doing is you're utilizing equity. In this particular case, they were utilizing equity to effectively feed into future cash flows. And so it would have an impact on total return to be able to do something like that. So there's a lot of reasons as to why. Sometimes we don't like areas, or sometimes we know areas really well, and we'll go, look, you're not planning well enough for, let's just say, security in this area. We know that there's a high crime rate in this particular area. We know you're getting a deal on it, but part of the reason you're getting the deal is because it can be difficult to operate here. And we know that about this specific pocket of the market where you're going into. And so a lot of it is on the ground knowledge of a lot of things. And that's part of the benefit of having operated too, as well as, going into deals, and why we get asked a lot too, because we do have a lot of market knowledge associated with, particularly in Texas.
So do you mostly focus on deals in your backyard, or at least in your vicinity in Texas, the 3-4 major markets there?
Yeah, so we stay in the state of Texas for the most part. And really it's knowledge gap after that, right? So as soon as we get outside of those markets of Texas, there's a lot of knowledge that we just don't have. We don't have that on the ground, boots on the ground knowledge. And so there's another element of risk that we'd have to add to the deal to really make it juicy for us to be able to do. So
sure. And so what's your team and kind of process look like, right? I'm sure people may, you have relationships that exist, that people say, hey, Sam, launching this deal here soon, or we're getting some contract here, have you and the team go check it out. Like, what's that review process for you and the team as to what you do, how far you go down each deal, right? Like, and then kind of each process along the way, what are things you're like, hey, you know what, this is it for us, and kind of bring it out or forward?
Yeah, the irony is we underwrite so many deals ourselves that it's more than likely there's a very good chance we've already underwritten the deal that's been brought to us. We underwrite that much. And so, somebody will bring us a deal and I'll go, oh yeah, we're familiar with the deal. They were wanting this, if it got even to the point where we were touring it or something of that nature, we may know kind of even more the CapEx needs associated with it. But if it had just gone through our underwriting, let's just say, and it didn't pass through our underwriting because of pricing, and a lot of deals will get kicked out because of that. And they come back and go, well, hey, yeah, but we got this pricing, right? And we'll go, well, hold on, that may change some deal dynamics. And we'll go back and revisit within our own internal of how we underwrote it and things of that nature. But a lot of times too, we'll know the markets that we're underwriting in fairly well. But there are other things that can occur too, right? Internally, we have through our conglomerate of companies, we have about 22 advisors, brokers internally, and so they know that they have to bring us certain deals first, right? And if the deals look like if they fit our metrics, they come through our analytics. So our underwriters will go through those too. And from there, if it looks like it's something that we really want to take a look at, they'll present it to our committee, and we'll go ahead and we'll look to see if it's something we want to go further into with that. And so, yeah, I mean, we have a spider network of everybody kind of just going out there trying to bring us deals so that we can evaluate as much as we can, really as quickly as we can, to see if there's something that makes sense. So, but you got to kiss a lot of industry. So
for sure. And I feel like for you as well too, like the amount of deals you underwrite as well must help you just keep a pulse on what's really current in the market too, right? In terms of what you're seeing. So how do you go relay all that info and kind of institutional knowledge that you have from being so hands-on on the underwriting, due diligence side of it, right? Vetting deals in your local market to your investors? Because to me, if I'm an investor, sharing that knowledge, kind of receiving it would give me a lot more confidence in understanding kind of how you think, how you operate, to go see if it makes sense to keep moving forward.
Yeah, so a lot of what we do too, and the way we communicate to our investor base. So I mean, every month we're giving them information, right? A lot of that information is coming from their requests, right? So the content that we provide back to our investors, mainly on a monthly basis, it tells them what we're looking at, what we're doing, how we're doing it, and then maybe answering some of their specific questions. And so, we push out a newsletter every single month, and in that newsletter, you'll see, hey, here's what we've been doing, here's where we've been, in the market right now, or here's what's going on, and it kind of gives more of a broad overview, right? Not as drilled down specifics. When we're drilling down specifics to our investor base, it's normally because we're getting questions, right? I mean, we'll have a lot of questions on things like interest rates. People are wanting to know, give me specifics as to why this is important or whatever it is. And we'll give them a blurb of, hey, here's what, our understanding is. And we'll cite sources and things so that they can read up even more on it, to some of the more obscure questions that you can get that are really very specific, right? But, our basis has always been, if somebody has a question, there's a good chance somebody else has the same question. And so we answer a lot of those through our newsletter, and it helps produce the content to the people that are wanting to consume that content. So it's kind of been the way we've done things, and it's worked out. And we'll have things from the very specific to the very broad, and some things that are really even more off the wall. Like, I can't believe somebody's even asking that, but if more than one person ask it, clearly it's something that could be a desire to know, right? So, last year, when a great example, last year when the Astros were in the World Series, somebody literally asked us. We actually had a couple of questions of saying, what's effectively the economic impact of having a World Series game in the city of Houston? They wanted to know the dollar amounts, like how much does this actually impact real estate and where we may own real estate in this area. And so our team literally went out and found the answers for them, cited the source, and provided the answer. And it was like, it was probably $200 million or $300 million for that day, or whatever the number was. But I can't remember right now. I'd have to go look. But that's literally what it was. And it was, man, this comes in the form of money into hotels and restaurants and things that people are doing in that local nightlife right then and there for the day before and day after the game. And this is impact of what a game would have for the local economy there. So it was less than what I thought it would be, but enough to where you'd sit there and go, all right, well, that makes sense. And it brings a lot of tax dollars into the area, and everybody benefits from that, right? So there is financial impact when something like that happens.
Sure. I mean, I saw it firsthand. So I'm down in Tampa, Florida, not right now, but I'm down in Tampa, Florida full time. And we saw it when the Bucks won the Super Bowl. It was actually in Tampa as well, because what you had happen was Tampa was like on the rise city. Houston's been around for a while. Like, Tampa's now just kind of coming up, and you saw in the sense that a lot of people who have money go to the Super Bowl.
Sure.
And people with money are then in your area and seeing, okay, there's actually something here. So like, you actually saw real estate prices pop pretty big after that, in terms of just people now understanding this actually happens here, right? So it's really cool seeing that firsthand on my end.
Yeah, and the cities, there's a reason they make bids for the Super Bowl, right? Because the entire week before the Super Bowl, there's parties, there's all kinds of stuff going on. They have the NFL Network, all kinds of things are going on, and it brings a ton of revenue into the local coffers of both the city and the businesses that are there. So
Yeah, it's also just a great time too to like showcase as a more tier two, tier three type city to get a chance to get some visibility. But let's
Absolutely.
shift gears a little bit. I know, kind of talking about Texas, and it's funny. I actually just recorded a podcast before this as well with someone who is huge, huge, huge on social selling. Right, very, very wide in terms of their reach. I know for you, from our conversations offline, you've got a very, very loyal, dedicated group of investors that have been with you for a long period of time. Kind of help us understand what that looks like for you. And I think you actually mentioned this too. You guys do a annual investor retreat, right? With some folks too.
Yeah,
Um,
a lot of things with our investors. I mean,
yeah,
let's see, like this year, so far, I guess we're in May. We've done. We went to a Life Surge event. I bought a section of tickets there, and that's it was a Kingdom Resources deal where we invited the investor base to come in and see speakers. Nick Vujicic, Tim Tebow was there. Willie Robinson from Duck Dynasty was there. I mean, it was just great, to be a part of that kind of community. We had a happy hour last month where it was just open for everybody. And there's no sales aspects to that. It's more of just come on in and have a good time. Let's see. This summer we'll do a cast and blast where we're going out. We'll go fishing and hunting one day for smaller groups. We like to do a lot more smaller type things. It's a little bit more quaint and comfortable when you can do stuff like that. But yeah, there's a lot of things that we do to continue to develop relationships with, what I would call a core base of investors. But it's guys that have been doing deals with us for a long time, much longer than Sunset Capital has been around. They've just been doing deals with me. And so, yeah, we take an approach where we go a little bit deeper instead of wider, and really have an understanding of what it is to deal with these types of investors and what their needs are. And so we can bring appropriate investments to them associated with that. But what it's done is it's obviously created a little more of a loyal base, right? So that we have some people that'll do every deal with us, almost no matter what. So, I mean, it's scary. We tell everybody, make sure you read everything and understand everything. And a lot of them aren't doing that all the time. And you can see how some investors get in trouble associated with that, right? But for our base, a lot of them, we built up a lot of trust associated with that. And so in that know, like, and trust, triangle, we've built a lot of trust over a long period of time associated with that group. And so, and it doesn't mean we don't grow our investor base. Our very best referrals are, that's the best compliment we can have, come from our existing base. So, the people that come in to invest with us are normally coming in through other people that have already invested with us, which is literally, it's one of the greatest honors you can have as a business. It means that what you're doing is working.
yeah. I think it's something too. Like it's probably a bit of a lost art at times now, where people want to go so wide in their outreach to get in front of new people, and they lose track of people that have been with them for a long period of time too. So on your end, kind of what's that process like from bringing on a new investor to maintain that relationship, right? Like, what kind of things do your team do right outside of the events and such like that? But like, what's that internal process look like to go build and strengthen those relationships?
Yeah, believe it or not, I mean, I'm old school, right? So as much as we're working on the active campaigns and the texting and all that other stuff, and nothing beats. I got to be honest, just nothing beats a phone call, right? And going, hey, bud, I'm calling to check in on you just to make sure we're good. I don't even have a deal right now or anything like that, but I'm literally just here to develop the relationship. And if everything's going great, wonderful, game on, we're all good and we're ready to tee you up for the next deal. It's really the stuff that you do when you don't have something active to sell. I mean, it's amazing that the communication that you're providing during that time frame, and really actually genuinely caring instead of not. I mean, if you're doing it, and there's not a genuineness to it, it's manipulative, right? And so, but if you genuinely care about the people that are helping your business grow and thrive, and you care about the results that you're giving to them, it shows. And a lot of those people, we would consider friends. I mean, I consider a lot of these guys friends because of that too, right? Because I genuinely care about what they do. And it's amazing too, because of that, you look to see how many people that invest with us that are part of the daily life that I have. I mean, it was several people from church. It's several people from, my kids' sports teams and things. It's where we did life, right? I was able to hopefully communicate effectively enough to show what we do. And it was good enough to where they could see that they get return associated with that. And it just grows from there, right? I truly have a relationship with the person that is investing with us, which is what we're supposed to have legally under the SEC rules too, right? And I can tell you a lot about that person. They can tell you a lot about me, and that we're actually, continuing to develop that over a longer period of time, right? This isn't something that you can create in a year or 2 or 5, right? It's something that takes a lot longer period of time to do when you can get to that. But when you can get to that point too, and the investment that you poured into those people, it can translate into something that's really powerful.
Yeah, I think for everyone listening too, it's definitely a good piece of advice to go kind of take a step back and see who you can go call, see who you can go build that relationship with. Especially right now, I think a lot of these people listening to this may be really focused on scaling and growing, especially as capital is just harder to raise right now. A lot of people are doing more work for less dollars right now in terms of more effort. And your intention may be, let's do more, but maybe going deeper with your investor base too versus going wider, and those things that don't scale in times of turbulence, I think definitely go a long way.
Oh, absolutely. And if you think about it from a logic perspective too, right? If you develop solid relationships with a handful of people, they're going to do every deal with you. You can count on them to be able to do that, and you make the investment back into them to continue to cultivate those relationships. You start off every deal, already out the gate with some money in your pocket to be able to do it, almost no matter what. And so it makes sense to develop strong relationships with those handful of people and to know where they are too. Like when, I know that we have a great investor. He does everything with us, and I know where his liquidity position is right now. I know how many more deals he really would want to do this year. I also know he's going to do it with me, right? And so that kind of knowledge is tremendous going into deals and understanding what you're going to take on, how much you're going to take on, and who you're going to take it on with when you're going into these deals.
Yeah, it's interesting because I think someone like yourself would likely have a better range. So like my background, I used to run sales teams, and similar as a sponsor, co-sponsor, you've got a deal to get done, you've got an equity allocation, you have to go size up. Right. And I feel like for someone like yourself who has those deep relationships, you're probably much more close to forecast early on when looking at, okay, I have to get $2 million here. I know that, they're good for this, they're good for that, they're good for this, right? You probably can go piece that out and align it much more quickly versus someone who is more the email blast, marketer in which they're looking to go pull their investors from.
Yeah. So to put that into perspective for you, of the raises that we've done under Sunset, I would say our average raise lasts no more than about 5 or 6 days, if that makes sense to you. So when we're committing as a co or something of that nature, and I go, okay, we'll do, X, whatever the number is. Let's just say it's $2 million, right? I'll do $2 million. I know within a few days, right, we've hit the $2 million, and I can go back to the lead and say, look, where are you with your other co's, right? Because if you need me to flex and get up to a certain level, I have backup equity of Y, and I can go ahead and put that in and give that commitment to you in short order, right? Within a short period of time, so that and you can have that level of confidence of closing with us. So one of the bigger challenges in being a co is that, you may commit something, and you see it almost a lot of deals too. I'll commit, let's say somebody goes, I'm going to give you $1 million, and they get out there and they go, all right, I'm going to go try to raise. I hit my email blast and I got 300 grand. And now I'm scrambling, trying to figure out how to raise the next 700,000. And they end up short because they haven't been doing enough of development of those relationships leading up to that point where they had the opportunity. So famous basketball coach, Sean Woodman, he said, when opportunity arises, it is too late to prepare. We are constantly preparing for the next race, constantly. And so you are always effectively raising money. You may not have a deal for it. And so a way of doing that is to continually cultivate the relationships and know where you are with the people that we have in the system.
Yeah, it's a great point. I think it just makes you also just more desirable to go work with from a co or lead sponsor standpoint too, of, hitting your numbers and also communicating that really quickly of if there's a gap, right? Right now it is difficult at times to go raise capital. And, I think some people have the big rosy picture of, yeah, we're good until we're not good. And if it's too late, it doesn't allow that lead sponsor or co-sponsor to go maneuver things to make sure they still get that deal done itself. So I think the over communication, quick turnaround time is huge. And building it before you need it just allows you to not have that level of desperation too when you're talking to investors.
Yeah, I can tell you on the two deals that we've already done this year as a co, we ended up providing much more capital than what we originally committed to. And part of that was, and it was early on because it was, hey, I've hit the number. Would you like me to take in more? And the answer quickly was yes, because I think you can see where how difficult it's been to raise money this year and how difficult it is for a lot of guys, and particularly when you have a fund-to-fund model or something like that, and you're bringing in and it's just not coming in the way that you had hoped. So.
Yeah, I actually had a long conversation with a pretty well-known sponsor recently who uses the fund-to-fund type capital program really well, and they were saying how much now they over-allocate for a deal is extensive, right? For example, if they have a $10 million equity raise for fund managers, they may go over-allocate at $15, $16, $17 million just to make sure that they can cover any gaps, because I think right now people would rather be told have to go tell someone no versus scrambling at the last minute for that.
Yeah, and so it's difficult too, and I would tell you it's tough, right? Because as a lead, you want to know that you have that equity, you want to know you have that certainty to close, and as somebody who raises money on the other side, to be told no, I don't need that money, or I don't need as much, and the amount of work that they're having to put in. I mean, you have a delicate balance of relationships when you're dealing with something like that, but I think what a lot of guys have found in the market, in particular right now, is that the aforementioned example I just gave, where somebody says, "Hey, I'll commit to $1 million," and all of a sudden they look up and they had $300K, and they're just not quite able to get over the hump of whatever it may be to either sell that deal or to communicate the effectiveness of the deal to their investor base.
So on your end, as a lead sponsor, how we work with people in the past and the co-sponsor side of it who have come up short, like what best practices do you have for that relationship on your end as to how to make it really transparent and kind of build a good relationship there, understanding each side may have some give and take too?
Sure. Yeah. For us, if we're ever asked to be a co, what I tell people is, one, it takes a minute to get to know me, and it takes me a minute to get to know you. It's not going to be something where, hey, I got this great deal. I know you can raise money. Why don't we pair up? It's going to be more of just like we have investments into the relationships with our investors, we have to know the lead sponsor pretty well too. A lot of times what that looks like too is, I've already invested as an LP into one of your deals. I'll see how you do your communication. I'll see how you guys actually operate. Is it going to be worth it for us to put our investor base into a deal like this? So there's a process that goes through, and it can take a minute. It's it's not as quick as, hey, I got this great deal, let me go bring it to Sam and we'll partner up together and get it done. It's just not, and I hate to say that, there's always going to be another deal. That's why I tell people there will always be another deal in this business. I've been around a minute. There's always another deal. And so one deal won't make or break you. If that's what you think it's going to be, investor. Yeah. From an investor standpoint. Right.
Yeah. Sorry. That's a really, really good point. Like most people, we hear it, hey, I got the opportunity, and we work with a lot of, first or kind of upcoming capital raisers as well and fully funded. And we hear it, hey, I got the opportunity to go be a GP on this deal. And I'm like, great. That's going to happen over and over and over again, especially as you get better at raising capital, have a proven track record there. I tell them, just like, take your time And,
Sure.
it takes a while to go build the relationship to, even have an investor go into your deal, let alone someone who's bringing 10, 20, 30 of their investors that they've built those relationships with, as it takes a while to go build them, and it can be lost really quickly. So I think a lot of
Yep.
people, if you're listening to this too, and kind of looking at bringing on co-sponsors or becoming a co-sponsor or fund manager for a project, like, take your time and have that long runway, and, again, build before you need it, so you don't have that desperation to go bring someone on and potentially burn that relationship that can be really good long term for the potential short term game of it.
Sure. And one of the things that's really great right now is that I'm seeing how sponsors are handling maybe things that aren't going as great as what they had hoped. And their reaction to that and how they're handling it and the way they communicate with it and what they're doing tells me a lot more about that particular group than anything they're going to tell me. And so, and it doesn't mean that if you have to go have a cash call that you're bad, but the way that you handle it, how you communicate it to your investors, and what you're going to do to be able to get out of it, that tells me a lot. And so, you can't be in this industry and not have, for as long as some of us have, and not have battle scars, right? So, we all kind of, I've been in this doing commercial real estate since '01, really, more so on the lending side early on. And you learn a lot real quick going through a few of these cycles as to what happens and, how people react. And then on all sides of it, what eventually is going to turn out, right? And so, understanding that co-sponsor, where they are, even in their journey and their life cycle things. And a reason a lot of people like to have somebody like us in our group in with them is, hey, if it doesn't go perfect, what's the best way to handle, or what's the best way to communicate, or, if I need to go talk to a lender, what are the words that I need to say and what are the words I don't need to say? And, all the things that we've kind of already been through before, and being able to help effectively communicate that to the leads. So,
yeah, that's a really big thing too, is just making sure you handle things or say things appropriately too, and looking at banks and lenders and working with investors in the right way. But you mentioned kind of going through the different market cycles, and I know we're kind of talking offline before this as well. We're starting to see some movement on the interest rate world, at least out of the United States. So what's your take on, the crystal ball you have of what's next, and kind of what you see coming with, where we are in the cycle, and kind of where things are going to land eventually?
yeah, I'll first say this, that anybody who says that they know what's going to happen with interest rates, if they do, if I knew what it was, we would be having this conversation on my own island somewhere, right? Because I would know exactly what, the way to put money and invest money associated with that. And so the easiest way to say that is, one, nobody knows, right? And if they tell you they know, be very wary of that person. But I can tell you, just because I do sit on the board of a bank, and we do get some benefits of speaking with regulators and having understanding what that looks like in that market. What I would tell you is, our assumption right now here, at least here in the United States, is that, we may have a superficial 25 bips cut sometime this year, and there's even a chance potentially for 2. I'm still more on the conservative side of that. We probably maybe won't have a cut, although the numbers we just saw in April were a little bit positive for that direction. There's still a few things that I think that the Fed needs to see before they're going to feel compelled to make any kind of move. Obviously, the ECB looks like they're going to make a move here shortly in the next week or so. They may drop their rates about a quarter bip. And so we'll see what happens. But I would tell you, I'm less concerned about that and more concerned about where we are today. Can you operate a deal today in the interest rate environment we have today, right? And does your deal work today? I tell a lot of guys, a lot of risk has been taken out of the deal. So, deals that we're buying today are a lot less risky than they were 2 years ago. And the fact that, interest rates have gone up, but now they've stabilized, right? And yeah, they may come down, they may even go up. We don't know, but it will be slighter. It should be less moves, right? And we know how to finance that, you have insurance that's been baked in, you have taxes that have been baked in, and it feels like that a lot of the risk associated with the deal, if you can make them work in today's market, with what we're seeing today, that a lot of the risk has gone away. And so, it feels like there's a lot less risk today than there was 2 years ago. And so from that perspective, I would tell you, and maybe it's contrarian, we're a little bit more aggressive when we're looking to buy right now, because we kind of know where the numbers are. And yes, can insurance go up? Yes, absolutely could. Can taxes go up? Yes, absolutely they could. Could interest rates go up? They absolutely could. But there are things that we can put into place right now to help mitigate that a little bit more. And the pricing has come down, obviously, from the last, call it 12, 24 months to where we are today. And so there's some benefits associated with that. But when you're looking straight up at interest rates and the way that market moves, because we watch treasuries every day, I think we're going to be able to probably be in a fairly stable environment for the next 12, 24 months. And so you're going to need to learn to make your deals work right now with the rates they are today. And if we get some cuts, hey, it's more gravy for the investors, and the cash flow should be improved if you're taking on a floating rate deal, which I still don't necessarily recommend, but I like certainty in the numbers. So,
yeah, super helpful.
Yeah.
Sam, before we hop off here, how and why should the listeners reach out to you and your team?
Yeah, so easiest way to reach out to us is through our website, sunset-capital.com. Great reasons as to why is, we do really feel like we have a great pulse on the market. We are an investor-centric, investor-first company, and so when people are looking to either look for co-sponsors, do deals, or invest directly with us, you can know that we're taking care of your money. We have a great sense of pride with our fiduciary responsibilities associated with that, and so and we're pretty welcoming, and I think we do have quite a bit of education that we can provide with the seasoned team that we have.
Cool. Sam, thanks again for coming on.
Sam, really appreciate it, man. Thanks for having me.
Thank you for tuning into the Fully Funded Show hosted by Sam Silverman. If you are enjoying the content, let's take your journey further in the Fully Funded Mastermind. The Fully Funded Mastermind offers more than just insights. It's a mastermind community designed to solve the real challenge of raising capital. By joining, you gain direct access to strategies, coaching, and a network dedicated to turning your financial goals into achievements. Don't let capital raising be a barrier to your success. Visit fullyfunded.capital to explore how our mastermind community can pave your way to financial growth.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow. Share with your investing pals and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.